Banks ran a data sweep on you before you ever hit submit, and you never signed a single form authorizing it. That's not a metaphor. That's a literal, automated background check running in parallel to your credit pull. Most people think 3 companies hold their financial history: Experian, Equifax, TransUnion. There's a 4th layer, and almost nobody outside banking even knows its name. Here's the part they aren't telling you. That 4th layer can deny you before your credit score is even factored into the decision. Think of a data broker as a private company that collects financial behavior. Data banks want, but the 3 main bureaus don't track. Companies like LexisNexis Risk Solutions, ChexSystems, and Innovis run that layer. They track things like bank account closures, overdraft history, check fraud flags, and how often you've applied for new accounts recently. When a bank pulls your file, it isn't pulling one report. It's pulling a stitched-together profile from multiple private databases you've never seen. In plain terms, the bank is checking a second hidden file on you that has nothing to do with your credit score, and that file can override an otherwise clean application. Here's where it gets specific. ChexSystems primarily tracks banking behavior, not lending behavior. Closed accounts with negative balances, suspected fraud, and account abuse flags. If you've ever had a checking account closed by a bank for overdrafts, that event can sit on your ChexSystems file for up to 5 years. Most consumers never request this report. Most don't know it exists until they're denied a basic checking account and told nothing more than not eligible. Put simply, this isn't your credit score talking. This is a completely separate system judging how you've behaved as a bank customer, not a borrower. LexisNexis operates differently. It aggregates public records, insurance claims data, and identity verification signals into what's called a risk score, separate from your FICO score entirely. A risk score is simply a number a data broker generates to estimate how likely you are to commit fraud or default, built from a mix of address history, employment stability signals, and public records. Not your payment history. Banks weight that risk score alongside your credit score. Sometimes it carries more decision-making weight than the score you actually track. Here's what that actually means for you. You can have an 800 FICO and still get flagged because the system isn't only asking, does this person pay their bills? It's asking, does this person's data pattern look statistically risky? That's not a guess. That's how the risk model pipeline is coded. Most people hear this and move past it. Don't. Let's look at how this actually flows through a real application. You apply for a checking account or a loan. The bank's system pings the credit bureaus for your score. Simultaneously, same second, automated, it pings ChexSystems for banking history and LexisNexis, or a similar risk vendor for identity and fraud signals. FactorTrust and SageStream, 2 more secondary bureaus, often get pulled specifically for subprime or near-prime lending decisions, tracking alternative payment history like installment loans, rent-to-own accounts, and short-term credit products the big 3 bureaus don't always capture. All of this happens before a human ever looks at your file. In plain terms, your application gets scored by 4 or 5 separate systems simultaneously, and a red flag in any single one of them can trigger an automatic decline, regardless of what your credit score says. Now, here's the part that should genuinely bother you. Strip away the banking language, and here is what is actually happening. You have almost no visibility into most of these files unless you specifically request them, one by one, from each individual company. That's coming up next, the exact legal mechanism that lets this happen, and the narrow window where the law actually forces disclosure. The Fair Credit Reporting Act, the federal law that regulates consumer reporting, technically covers data brokers that qualify as consumer reporting agencies. ChexSystems, LexisNexis Risk Solutions, FactorTrust, and SageStream all fall under that FCRA umbrella, which means you have a legal right to request your file from each one separately for free. Here's the friction point. The law requires disclosure. It does not require notification. A bank isn't required to tell you which specific secondary bureau flagged your file, only that an adverse action occurred and which agency provided the data. buried in a notice most people never read closely. That's not a guess. That's how the adverse action notice requirement is written, and it's the reason this entire layer stays invisible to the average consumer. Metro 2 is simply the data formatting standard that credit bureaus require lenders to use when reporting your account information, the grammar rules of credit reporting, essentially. Data brokers aren't bound by Metro 2 the same way. Their formatting, their scoring logic, their internal risk models, largely proprietary, largely unregulated in terms of methodology. Here's what that actually means for you. The system feeding your denial can operate on rules that are far less standardized and far less consumer-friendly than the credit bureau system you're used to disputing. Here's the systemic reality tying all of this together. Your credit score was never the entire picture. It was one input into a multi-vendor risk architecture built specifically to catch what a credit score can't see: behavioral patterns, identity anomalies, banking history outside the traditional lending system. The three major bureaus get all the attention because they're consumer-facing. The data broker layer gets none of the attention because it's built to operate quietly behind the underwriting engine, doing exactly what it was designed to do. In plain terms, the credit repair industry taught an entire generation to fix one file, while banks quietly built a second and third file that never showed up on any dashboard. That gap between the file you can see and the files the bank actually checks is the real reason clean credit profiles still get denied. This channel exists to map that gap, not to tell you what to do about it, to show you exactly how the machine is built, so you understand precisely why the decision happened the way it did.